from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, sign-up slowdown. Netflix shares plummeting in late trading as the streaming service misses on subscribers. We'll break down the numbers. Plus, pressing pause. Peloton reportedly halting production of its signature bikes. Ironically, just after the company added a pause button to the bike, literally. We'll hit the stock's downhill ride. And Senate lawmakers advance what could be the biggest chance to date to rein in big tech with an antitrust bill that has bipartisan support, though some still raising red flags. We'll debate the future of a U.S. big tech crackdown. All that in a moment, but first let's get a look at the markets. We saw a big change in direction late in the day. Our Ed Ludlow here with the latest. What happened, Ed?
Yeah, look, it's not every day that we show you the blow-by-blow, minute-by-minute trading of any session, but this is Thursday's session, right? And you can see this really bearish turn in the afternoon. We go from a 1% gain on the NASDAQ 100, very tech-heavy index, to a 1% decline. That drags the NASDAQ 100 into correction territory, right? A 10% drop from a high to a trough. And that's been the story of the year so far. But Mr. Director, bring up the next board, because this was broad-based. The whole market turned a corner late on Thursday afternoon. You have the NYSE FANG Plus index, those mega caps and social media companies that had been up so much earlier in the session, they also declined more modestly, 0.3%. And the Philadelphia Semiconductor Index, that gauge of chip stocks, having a really rough start. It's a really bad streak, basically. Lowest level since October, longest losing streak, 4 days in a month, and investors really changing their sentiment. Ironically, crypto continued to rise throughout the session. You see the Bloomberg Galaxy Crypto Index up 2%. But late to the party, finally got the memo. Bitcoin also dropping late Thursday. It had been around $42,000, almost $43,000 per token, but then falling away late towards $41,000. What happened, Emily? Peloton. Bring up the next board. Let's take a look at what happened with this stock. Falling as much as sort of 24%, the biggest drop since November. You can see there just a really precipitous plunge. CNBC reporting that Peloton's halted production on some of its big ticket items, and that has the market worried. That actually seemed to move the entire market as we enter this earnings season, because a lot of their commentary and their troubles are pandemic related. And of course, we have to talk about Netflix reporting earnings after the bell. It expects to add just 2.5 million net subscribers in the first quarter. You can see the reaction from investors, down 19%. Do you watch Bridgerton, Emily? Is that one that you...
Oh, yes, absolutely.
Okay, so Emily Chang's a Bridgerton fan, okay? You read the release from Netflix earnings, and they're saying that the reason that they've downgraded their outlook to 2.5 million subscribers from 8 million, a big drop, and the street's looking for 6.5, is because the second season of Bridgerton's coming late in the quarter. March. I'm not the problem. I'm already a Netflix subscriber, right? I'm enjoying Witcher Season 2. Emily Chang doesn't know what Witcher is, so we've got to get her up to speed on that. But this is the problem, the content pipeline and the macro environment they're talking about as well, Emily.
And we have to wait a little bit longer for Bridgerton Season 2. Not good news. Ed, thank you. I want to stick with Netflix now. Shares falling in late trading after coming up short of subscriber estimates for the current quarter. Could the streaming giant be entering a new phase of slower growth? Andre Swanston of TransUnion with us now. So we're seeing investors' reaction here to these numbers. Andre, what's your reaction?
Well, I think that the first thing that I think everybody needs to realize is that Netflix used to be a utility. It's now a commodity. 5 years ago, if you had a smart TV or a streaming device, the first option, in many instances, the only option to really have wide-scale availability to content was Netflix. Now they have increased competition, not only from the Disneys and the Amazons and others, but the real growth over the last year in streaming, particularly in the US and Europe, has been free ad-supported streaming solutions that, in the United States reach over 80 million homes. And so that's, I think, the most difficult thing about Netflix's situation right now.
So let's talk about Netflix's ability to stay ahead in the content race. Obviously, they've had big hits like Squid Game. Given that even Netflix is acknowledging more competition in streaming, what do you think the chances are they can continue to stay ahead?
I think they're very slim, and it's for a few reasons, right? So even though Netflix has outspent almost everybody over the last 5 or 6 years in terms of content production. They're now competing against the likes of Disney, who have 100 years of content built up and the ability to renew and do other things with their content. But even more importantly than that is that Netflix still has only one real touch point with the consumer. 3, 4, 5 years ago, everybody was jealous of Netflix's data advantage. They had all this insight in terms of what was popular, so they could license content better than other people. They could produce content better than other people. Now, I would argue that Netflix is actually at a significant data disadvantage against the Amazons and the Apples and the Googles and the Disneys of the world that understand e-commerce. They understand how people leverage different devices, how they stream audio, much more gaming information. And so I think it's going to be difficult for Netflix, which is really more just a content production and distribution company, to kind of compete against these more diversified media companies.
Meantime, HBO Max has been one of the top downloaded apps according to Apptopia, and I didn't realize this, but the Sex and the City reboot is a main driver of that, despite some of the publicity along with Euphoria. Do you think original programming on HBO has a leg up because it's HBO?
I think I would have been more likely to say that a few years ago when they had Game of Thrones and other mega titles. HBO obviously has good content, and it's something that they do well. I think HBO Max and others have also proved that you can be successful still with having the release window in theaters as well as on streaming. Disney's also seen some success with that. I don't think that the challenge is going to come from one competitor. Netflix's concern isn't specifically that Disney is going to have better content than it. I think that's highly possible, but I think it's the sheer onslaught of the consumer having so many options. And so even if you took at it outside of streaming, in any business, if you have increased competition, and that competition in many respects can have cheaper prices than you, or even offer goods and services for free, or offer more goods and services to your consumer, it's going to be very challenging for your business.
Meantime, Netflix, of course, is getting into gaming. Some analysts are saying that could be a huge driver of future growth. We're hearing so much about the metaverse. Is Netflix really prepared to compete there?
No. So, I think I was one of the first people to say, 4 years ago that Netflix really needed to getting to gaming. I've been saying it over and over and over again. And it was and it was definitely the right move to do so. I think the concern is how slow they're moving with already being behind. One of the things that Netflix benefited from was being the first mover. At pretty much everything they've been successful at, they've had a first mover advantage in terms of streaming domestically, international distribution, producing originals specifically for streaming. But lately, they've kind of been late to the party. And so, you can't be years behind Microsoft and Sony and Amazon and Google and invest less money than they're investing and think just because you have a large subscriber base that you're going to be able to catch up and compete.
All right, well, we'll keep watching these headlines roll in from Netflix. Andre Swanston of TransUnion, always good to have your perspective here on the show. Thanks. Coming up, retail investors now have the chance to ask business leaders like Elon Musk and Cathie Wood questions directly, thanks to Robinhood. My exclusive conversation with Robinhood's Chief Product Officer coming up next. This is Bloomberg. With earnings season now underway, Robinhood announced that starting today, retail investors will get a chance to ask company leaders questions. This after acquiring the shareholder communications platform Say Technologies back in August. Users can now ask questions via the Robinhood app, and if they are upvoted, those questions will get asked on earnings calls. Robinhood says this is a chance for investors, no matter how big or small, to feel a sense of ownership. For more, I'm joined by Robinhood's Chief Product Officer, Aparna Channapragada. Aparna, thank you so much for joining us. Talk to us about what the vision is here and how much demand you think there will be.
Thank you, Emily, for having me. The what is very clear. If you think about access to investing, one of the big gaps we see is that you don't have access to the companies that you're investing in. So this launch, what we're doing right inside the Robinhood app, being able to connect to companies that you invested in, talking to CEOs, asking questions, upvoting, following up, and engaging with them, including, as you said, Elon Musk, but also our own management team. What we think it does is actually give a channel for retail investors to express their ideas, to ask questions. And if you think about it, that happens today for institutional shareholders. And we think that's an opportunity for participation and long-term, yes, ownership for all investors, big or small.
Now, companies that use this technology range from Robinhood, as you say, as well as Tesla, AMC. What's been the reaction from CEOs like Elon Musk? What do they get out of this?
I think it's been fascinating, Emily, because on one hand, I think for the retail investors, this is a great opportunity for them, for their voices to be heard. But the company's reaction has been equally positive and interesting because they find that the retail investors are asking questions. They're often, if you think about it, these are not just ticker symbols for many of these folks, right? Myself included. These are brands that they believe in, companies that they are passionate about, themes that they care about, clean energy, et cetera. So the questions they ask are a lot more pertinent, like about the product roadmap, about where the company is going, and expressing strong desire for the company to do well. So the companies themselves are also really excited about this.
Robinhood is increasingly not just giving users the tools to make investments, but also advice on what investments to make. You've got this trade recommendations now for beginner investors. How do you make those recommendations and ensure you're making the right recommendations?
Look, I think the arc here is very simple, right? This company, Robinhood, is all about expanding access to investing. Now, we started out doing that with zero fees, fractional ownership, better education, 24/7 support through customer service, the crypto. And this recommendations is another step. And in fact, actually, it's designed for first-time investors. And with education to aid them to make the starting choice. And the minimum is $20. And the way we do that is basically analyze the risk profile of the customer based on inputs from the customer. We also match it with the portfolios that we do have, diversified portfolios that we do have. And it's industry standard methods like, Black Litman, modern portfolio theory, and make sure that people can, again, get started investing. One thing I want to say here, Emily, is that this is a product, what we are seeing is disproportionately useful and engaging for customers who don't have a specific stock in mind, right? And they all are told, in fact, actually many women, they're all told to start investing, but they see that message, intellectually get it, and they don't know where to get started. And this is meant to aid that process.
Interesting. Everybody certainly has to start somewhere. Now, of course, Robinhood has been accused of gamifying investing, glorifying gambling. Do you think you could be venturing into dangerous territory by moving in that direction?
Look, I think there's a vast chasm between gamification and what we do, which is accessible design, right? And what do I mean by that? When we say accessible design that is intuitive, right? So that you're not kind of like running into dead ends and mazes on a mobile phone, which, let's face it, is the primary computing device for many, many people. So we should be careful about not, being patronizing or being elitist in terms of like, hey, if the wealthy do it, it's investing. And if you start to get a line of sight into your financial future, it's gambling. It has to be intuitive. So that's accessible design. And second, we're also really keen on making sure that the information is in context. So we've been working on these bite-sized explainers, whatever step you take within the application, to be able to explain in context, what is PE ratio, what's market cap, what about this crypto coin, et cetera.
Okay.
If those things are accessible design, we want to do more of them.
Robinhood just launched crypto wallets in beta. How's it going so far? How much demand has there been? And especially, what kind of activity are you seeing, given that we seem to be in the middle of a crypto winter?
Great question, and actually very timely. We just announced that the beta program is live. Really excited about it. And there's two things here. One, there's close to 2 million people on the wait list. We are systematically approaching this we're developing in public, as I call it, working with the crypto community, working with our customers, iterating on the product and making that better. The second thing here is that we're doing it in a way that is both intuitive and safety first. making sure that we've all heard stories of folks who are, have lost their coins, who are kind of like can't access them. So we really want to make sure that the security and safety is right in place. And that's why we're taking the time to do that. And look, crypto, I think, again, for us, it's a lens into access to investing. There's a whole new set of customers and people coming on board and getting started in investing with crypto. And that's what we want to enable. It's a long game, right? And we want to make sure that we do it safely.
So let's talk about what really matters. Are you going to list Shiba Inu or not?
I was almost sure that, Emily, you'd start with when Shiba. Look, I mean, first of all, really appreciate the community and, love seeing the energy around Robinhood. We don't take that for granted. At the same time, I cannot and will not talk about token listings. The thing I will assure you, folks, is that, again, we are systematically putting our building blocks in place to be able to enable great crypto products. It started with actually like enabling access to coins, and we are the best and most inexpensive way that you can actually get into this new emerging economy. Crypto wallets, you just heard me talk about it. We also launched crypto gifting. You'll see us continue to play in this space, but we're not going to play, crypto bingo.
All right. We are coming up on the one-year anniversary of the so-called retail revolt when Robinhood paused buying of GameStop shares to massive protest. I'm curious how you reflect on that 1 year later and, what you're doing to make sure Robinhood never finds itself in a storm like that, if you will, again.
Emily, I think there's one thing specific to Robinhood per se. Of course, it's made the company stronger, greater controls, and that's why we launched 24/7 customer support. We're the only major crypto platform, for example. It offers that. It's just made the company a lot more robust and resilient in terms of infrastructure. But the broader point I see is that the bathwater is that retail energy, and there's a lot of appetite and energy for retail investors to express their voices. And that's why what we launched today in terms of actually channeling that and being able to connect retail investors directly with the companies they invest in, we think that's the beginning of shareholder democracy and retail investor participation at a whole different level, right? I mean, it's no longer restricted to Wall Street. It's about the Main Street.
Absolutely. Well, looking forward to seeing how many investors use that new feature. Thanks for telling us all about it. Aparna Chettipragada, CPO of Robinhood. Thank you for stopping by. Coming up, Peloton plummets. A report that bike production is on pause sends shares downhill. We'll have details next. This is Bloomberg. It's been a long, hard downhill ride for Peloton. Shares plunging on a CNBC report that the company is temporarily halting production of its big-ticket items, including its signature bike, due to a drop in consumer demand. In November, Peloton slashed its sales forecast, sending the stock to its worst rout ever. Shweta Khajuria of Evercore with us now. Shweta, what's your reaction to this?
Well, hi, thanks for having me. Well, I think that, so we, just to level set, we have an inline rating on Peloton stock. We have been on the sidelines since we initiated in April. Our first reaction is that there's a lot of things that are going on with Peloton, but two key things that we want to focus on. One is that they are facing the opposite of what they faced during COVID. One, they had a ton of demand during COVID, and they were struggling to keep up with the demand. Now it's just the complete opposite. They have built this vast capacity. They've got a ton of inventory, and they're seeing diminishing demand. A, because economies are going to reopen, and people are going to go back to the gym, and B, there is a lot of competitive pressure. And their products are not necessarily the most price-friendly products. They are great value. Satisfaction rates are high, but they do face a ton of competition. So in an environment where markets are reopening, where their cost structure is really high, where they still have generating losses, and where the competitive pressures are high. And on top of that, they may actually raise prices because now they're going to start charging $250 by the end of this month for bike delivery and $350 for tread. So that does raise prices even further for consumers. I think this is just a perfect storm for Peloton. They are also on top of, go ahead.
What do you think the demand trajectory is going to be going forward, given that, we're hopefully coming out of a pandemic? There was a big spike in orders through the pandemic, but, going forward, a lot of the people who were going to buy a bike maybe already bought a bike.
Exactly, and that is our point. I think that there are two sides of this. If you talk to someone, an investor, or anyone who is really bullish on Peloton, the idea is that the market is very large and that there should be ongoing demand, and they just saw a pull forward that they will benefit from on an ongoing basis. The fundamental question for Peloton is really how big is the market and how big is their competitive moat? We think that their competitive advantage is diminishing because if you actually look at Nordic Track's new tread launches, they are very competitively priced. Their warranty is just as good or even better than Peloton's. Dimensions are the same. Basically almost the same product with a better value. And so the question is going to be, well, and not only is market penetration an important question, but also competitive dynamics. And then the other question is, okay, how many households are really going to buy a connected device, a connected fitness device that is affordable? And that is the key question. And we think that the market is smaller than what some of the bulls out there are thinking.
Interesting. All right, Shweta Khajuria of Evercore, thanks for weighing in. We'll continue to watch what happens there. Coming up, the Senate moving forward with major antitrust legislation going after big tech. What could it mean for companies like Alphabet, Apple, and Amazon? Adam Kovakovich with the Chamber of Progress with us to discuss next. This is Bloomberg.
I'm very concerned about the bill this committee is considering. It's not really the type of legislation that we usually consider, where the rules are laid out and everyone is expected to comply. Instead, it's specifically designed to target a small number of specific companies, most of which are headquartered in my home state of California.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. That was California Senator Dianne Feinstein commenting on an antitrust bill that many believe could be lawmakers' best shot at reining in big tech. Despite concerns, that bill ultimately made it out of committee, 6 senators opposing, all Republicans, but plenty of Democrats, including, as you heard there, Feinstein and fellow California Senator Alex Padilla, both opposing the bill as it stands, fearing that it could hurt consumers, and they're also concerned about security. So we can expect amendments. For more on all of this, I'm joined by Bloomberg's Tom Giles, our tech editor, and Adam Kovakovich, founder and CEO of the Chamber of Progress. Adam, this bill, as I understand it, would prevent companies like Apple and Google and Amazon from preferencing products like Apple Music and Google Maps and Amazon's private label products. Talk to us about how significant this bill, if passed, could be.
Well, I think, frankly, these are some of the most significant potential changes to consumer technology products that Congress has debated maybe ever. As you said, they're aimed at prohibiting the big five companies, top five companies, from preferencing their own products. And so, in effect, that would mean that Amazon couldn't feature Amazon Basics brand products. It probably couldn't highlight Amazon Prime 2-day shipping products. A new iPhone probably couldn't come pre-installed with iMessage or FaceTime. And a Google search for a local restaurant probably couldn't include a Google map. So if you think of tech products like a car, right, that comes installed with windshield wipers or a radio, under this bill, you would be forced to get all those amenities separately rather than having the convenience of having them built in. And it's not surprising that there's some companies like Yelp and Spotify that would benefit from that kind of mandate. But I think consumers would see pretty negative impacts from this kind of step.
That said, even though a number of senators opposed the bill, they still pushed it out of committee. I want you to take a quick listen to Senator Coons and what he had to say.
I have remaining concerns about privacy and security, about our global competitiveness, and about services that are widely popular with consumers and my constituents. So I am going to support this bill in markup here today in this committee, but I expect the bill sponsors will continue to work to address some of these open questions that I and many others have expressed about the bill.
Tom, what do you make of that? There's clearly bipartisan support for big tech, reining in big tech in some way, but will there be actual agreement on how to do that?
Yeah, I think there's a long distance from getting out of committee where we've gotten so far to actually seeing this put into, something more substantial and make its way through the Senate. There is bipartisan support. I know there's debate about how much the support is or isn't in favor, and I do think that, you do see people who are advocating on behalf of the tech companies trying to send the message that this will hurt consumers. It's hard to see exactly where the consumer gets hurt when, if you're one of the advocates of this legislation, the argument is that you're giving more choice. You're doing away with, or you're undermining the subtle ways in which a Google, for example, puts forth its products or gives them a little bit more prominence, or the ways that Amazon might encourage subtly or overtly it's the businesses on its marketplace from having to use its products. And also there's questions about the extent to which Amazon uses the data that it collects on these businesses to advantage its own products. It knows what sells. It knows what flies off the virtual shelves. And it's hard for Amazon to make an argument that it doesn't use that information to its advantage. And Google is very much in the driver's seat when it comes to how the page is laid out and what you see. And ditto for Apple, when these apps come preloaded, they get preference. They show up and they're right there for you. And I think the intent behind this is to level the playing field a little bit more. And if you're a lawmaker, knocking big tech gives you some political points, and that's kind of crucial for some in an election year.
Adam, as somebody who worked at Alphabet/Google for many years, you said earlier you think consumers are going to be hurt by this, but on the other hand, it seems almost obvious, what Tom says there. Of course, Google preferences its own products, and isn't that a conflict of interest?
Well, frankly, and Tom referred to this, I think what you saw at the hearing today was, frankly, a pretty good debate over what's at stake, and there's two competing visions. You saw Senator Klobuchar voice a concern that, as Tom said, big tech services had allegedly crowded out services like Yelp and Spotify, made it harder for those for services to reach customers. But then you did have people like Senator Feinstein, as you excerpted, and even Senator Padilla, who had a really interesting moment in the hearing where he said, look, consumers like that they can go to Amazon or Google, search for a local restaurant or product, and within a few clicks, it's theirs. They appreciate the convenience of integrated services. So I think you saw those two opposing viewpoints going at it in frankly a pretty substantive way during this hearing today. And the sponsors of the bill are clearly trying to help some companies. Other senators argued that millions of Americans are pretty satisfied. And I think, frankly, that's why you see both Republicans and Democrats somewhat divided on this topic.
realistically, how much more debate do you expect to see here? And what is the likelihood of this bill actually getting passed, Adam, from the vantage point in Washington?
Yeah, I agree with that. I think it faces an uphill battle because senators are split. Yes, it has bipartisan support. Yes, it was approved by a majority of committee members today. But if you dig deeper and watch the hearing, and again, we've been talking about this, you saw both Democrats and Republicans voice significant concerns. There's a custom of senatorial deference, but I do think it was unusual that you saw some Democrats saying, look, I'm going to vote for this, but it needs work. And that's a very similar posture to a lot of House Democrats to their version of this bill. Even Senator Grassley, who's the lead Republican on the bill, had a moment in the hearing where he said, look, this bill really isn't ready yet to attract the necessary 60 votes that it would need to pass the Senate floor. And leaders of the Senate and House tend not to bring bills to the floor unless they have unified support from the majority party. I think you saw today on the Democratic side that among Democratic senators, there are mixed views on this as of now.
So, Tom, what are you going to be watching for quickly as we move forward?
Well, you saw debate over amendments. We talked about the international dimension here and whether this disadvantages U.S. players. So lawmakers are not going to let something pass that they view is going to somehow give an advantage to these big Chinese players. So you're already starting to see discussion of amendments that would also target ByteDance, Tencent, et cetera. So I think the international dimension is going to come to play. And I think these small businesses need to get their message across. Google and Apple and the large companies have platforms, and they are able to get their views out there, and they're able to show this is the way things are, and you like it because this is the way things are. The small businesses need to get their message across, which is there's a choice, and are you being given a choice as a consumer about the search engine you use, the products you buy, the apps that you download? And can these big platforms be doing a better job of giving you that choice and making that choice clear to you? That's what these smaller businesses need to do a better job of communicating.
All right. Bloomberg's Tom Giles, Adam Kovakovich with the Chamber of Progress. Much to keep monitoring. Thank you. Well, the Federal Reserve took a key step today toward the possible issuance of a U.S. digital currency. It is a move the central bank says could dramatically alter the American financial system. The Fed solicited feedback on a government-backed coin known as a CBDC. As expected, the central bank made no firm conclusions on whether the U.S. should issue a digital dollar and says it didn't intend to process without clear backing from the White House and Congress. Coming up, cleaning up cryptocurrency. That was the topic of a U.S. House subcommittee hearing earlier today at the energy usage of blockchain, which some members called concerning. We'll have more on that next. This is Bloomberg.
We need to be thinking about ways to encourage innovations that improve our energy grid, increase the mix of clean energy supporting it, and improve energy efficiency across industries.
New York City Mayor Eric Adams just confirmed his first paycheck, which arrives on Friday, will be converted to Bitcoin and Ethereum, making good on his campaign promise. Coinbase will be handling the conversion through its direct deposit feature, which allows transferring a portion or the entirety of a user's paycheck into a crypto wallet. And speaking of crypto, much has been said about the carbon footprint of crypto mining, which was precisely the topic of a House subcommittee hearing earlier from the Energy and Commerce Committee. Let's dive into this with Kristen Smith, the Executive Director of the Blockchain Association in Washington, D.C. Kristen, what were your big takeaways from the hearing today? Obviously, the concern is that crypto mining uses a lot of energy.
Yeah, the big takeaway I had was that this was actually a pretty constructive and balanced conversation. You know, we have seen the energy issue come up in other hearings, about a year ago, most notably on the Senate side in a hearing on the Senate Banking Committee. Elizabeth Warren expressed deep concerns. But I think that the message has gotten out to members of Congress that they want to be thoughtful in their approach to this space. I think there's now an understanding and a realization that Bitcoin and other crypto networks are something that's here to stay, and that this is something that they need to be thoughtful about. And I thought there were some good questions. You know, this is a committee that, unlike the Financial Services Committee or the Senate Banking Committee, they're relatively new to understanding this, but they understood a lot of the nuances between proof of work and proof of stake. And so I was very heartened by the hearing, and hopefully that lays the groundwork for more education as we get into 2022.
There was definitely more friendly banter than we've heard in prior hearings involving the tech industry. Take a listen to this from the CEO of Soluna Computing, which sells clean computing to businesses, including the crypto community. Listen in.
You're appropriately exploring the narrative that the energy demands of cryptocurrency will destabilize our grid. And I'm here to tell you that the narrative is wrong. Crypto computing can be a catalyst for clean energy development, which will reduce pollution and create local jobs.
Do you agree with that, Kristen?
Yeah, no, John is absolutely right. If you look today with renewable energy, you often lose so much of that. And if you pair Bitcoin mining with the deployment of renewables, it can actually make something that was unprofitable now profitable because you pair it with Bitcoin mining. And furthermore, Bitcoin mining can be turned off and on easily so that you can, manage the amount of electricity going onto the grid. So yeah, us in the crypto space, we think Bitcoin is actually is a positive development for renewable energy. We also heard debate today about some of the other blockchain consensus mechanisms that use less energy. And what we didn't get into, but I would like to see more discussion of going forward, is you can actually do carbon credits very easily on a blockchain. And there's a lot of innovation going on in that space as well. So I think that we have a really good story to tell as an industry and as a community around this space, and that this was a very, very good first step towards getting some of that messaging before Congress.
Now, I want you to take a listen to a quick exchange between Representative Dunn from Florida and the CEO of Bitfury, speaking of the developing relationship between the crypto community and Washington. Take a listen.
On that efficiency note, we're seeing much more interest in producing ultra-low voltage ASIC chips and whatnot. What are you seeing in that area?
The energy improvement from 2013 to 2022 at Bitfury alone is, wait for it, 6,100%. And the pioneering of those kinds of quantum leap, order of magnitude efficiency gains are shared across all of computing. In the same way the space program created lots of benefits for other things in the world, Bitcoin mining has produced a lot of other fundamental innovations for other parts of the world.
So we spend a lot of time whining about we can't get enough chips. You're helping us with this.
We're on the demand side, that's for sure.
Excellent.
Kristen, would you say you're seeing a marked improvement in the relationship between the crypto community and Washington, or more understanding? And what does that mean for regulation?
Yeah, it's gotten a lot better, and there are a lot of reasons for that. One is that there's a very active community on Twitter and in the crypto space, and we saw this really for the first time in August when the Senate was moving the infrastructure bill through. Crypto Twitter activated. They got in touch with their senators and their congressmen, and they let their voice be heard through Twitter. And this has been an incredibly powerful tool. We're also actually starting to see a lot of new candidates come into the space that have crypto policy as part of their platform. They're running and diversifying and their messaging by being pro-crypto. And so I think members of Congress realize that if they're not careful, they might find themselves inadvertently having a primary challenge from somebody who is pro-crypto or, being attacked on Twitter by a bunch of crazy crypto people. Nobody wants this. They want to be constructive. They want to be seen as leaders. And they realize that, going back to the previous segment, we have issues with big tech. The answer to big tech is to support crypto networks, because that is going to drive innovation that's going to open up these platforms, open up competition, give users control over their data and more choices. And so I think that message about Web3 and what can be done with crypto networks is starting to sink in. And we've really turned a corner. Still a lot of work to do, a lot of education, a lot of policies that need to be cleaned up. But the pieces are coming together, and I'm really optimistic that we're on a path to getting good policy for the entire crypto ecosystem.
All right, Kristen Smith, Exec Director of the Blockchain Association. Thanks for weighing in. Coming up, is this Mercedes-Benz's move to autonomous driving? We're going to hear from Luminar Technologies after announcing their lidar will be used in the automaker's next generation of cars. This is Bloomberg. Let's talk cars now, with Mercedes-Benz announcing earlier that it plans to use lidar technology from Luminar in its next generation of cars. Lidar being a key ingredient in autonomous driving. Austin Russell, Luminar Technologies founder and CEO, spoke with my colleagues Alex Steele, Guy Johnson, and Ed Ludlow about whether the European market is ahead when it comes to autonomous driving.
There's no question that the Europeans have been ahead of the game when it comes down to it. They started earlier and they've made a lot of the right technology bets of when it comes down to it and approaches. And, I think there's an opportunity for some of the American automakers to catch up. But they're going to have to take action and do it quickly if they want to be able to catch up to the Mercedes and Volvos and other types of automakers out here in Europe.
Hey, Austin, I wonder where, it's Alex in New York, by the way, I wonder where the catch-up potential actually is. It's great if my car can drive me to work, but it feels like buses, mass transit, huge trucks that are transporting goods, like that's where we need lidar. That's where we really need to see the opportunity.
Yeah, absolutely. And, we're also, for example, from a commercial trucking perspective, we see that as a huge opportunity. And, we're actually also working with the largest producer of commercial trucks, which is Daimler Trucks, which now actually separately operated, separately run than, Mercedes previously had the same owner behind their parent company, I should say. But yeah, no, it's absolutely important. Of course, the volume of consumer vehicles is, a multiple of what you can have even on trucks. So that's why the significance of something like this is very high when it comes to actually being able to put it onto consumer vehicles as the intent for what we're doing this collaboration development for.
Austin, Elon Musk and Tesla believe in a camera-based technology approach to fully autonomous driving. Luminar and many others, academics, I guess general wisdom says you need a sensor suite of many sensors, lidar, radar, camera. Why is Elon Musk wrong?
Well, I think when it comes down to the fundamentals, it's just a question of what you want to do. You can build a great assisted driving system, for like a level 2 ADAS system on roads with cameras. In fact, you have companies like Mobileye that have been doing this for the better part of a decade, and Tesla has effectively built an independent system that's similar to the Mobileye system that's there. But when it comes down to it, if you want to be able to reach higher levels of autonomy, well, at the same time, just improving the basic safety capabilities of the vehicle, which, by the way, even with the existing camera, radar system, despite now the substantial majority of new vehicles, including, some form of an assisted driving feature, they still get into accidents all the time. It doesn't fundamentally prevent you from being able to even just do something as simple as not running into the thing right in front of you. And this is the whole point in terms of the revolution when you have this kind of sensing technology, when you have the lidar, when you have the software capabilities.
Austin Russell there, CEO of Luminar Technologies. I want to move on now from cars and Tesla and talk about another venture of Elon Musk's, brain implants. Musk company Neuralink is now hiring a clinical trial director to oversee the startup's long-promised human trials of its medical device, indicating their long-standing goal to implant chips in human brains is getting closer. Our Sarah McBride here with us for more on that story. So talk to us about the big picture goal here and how close they are to human trials, quickly.
Sure. So the big picture goal is to help alleviate neurological disorders like stroke and paralysis. And Elon Musk's team at Neuralink believes they can do that by implanting chips into human brains. That sounds crazy, but there are actually a couple 100,000 people around who already have chips for various conditions in their brains, mostly things like Parkinson's disease or epilepsy. So this would be taking these chips to a new area where they would solve these neurological disorders.
And quickly, what do we know about this clinical director position?
Well, the chief thing this person will have to do is interact with the Food and Drug Administration, which has to sign off on any clinical trials. And the way they described the job makes it clear that they're in the early stages. We'll maybe see some if everything goes super well by the end of the year at best.
All right, wonder how close we are. Bloomberg's Sarah McBride, thank you.
Thanks.
That does it for this edition of Bloomberg Technology. Tune in tomorrow. We're going to be talking to Greg Becker, CEO of Silicon Valley Bank, on all of their offerings. You don't want to miss it.